bring in Sam Vadas to help set up the action today. All right, Sam, we'll talk big picture first, kind of macro or headline focus, if you will. And I know we've got some earnings to dig into. But before we get into those earnings, let's talk about trade. I mean, it is clearly, once again, top of mind on Wall Street. And it seems like the view is that so far, nothing bad is happening. All systems go. And China is the focus now, right?
China very much is the focus because those talks are happening as we speak over in Stockholm. We're up to day 2 now, so they are continuing. We've had, I believe, 5 hours of discussions yesterday between trade officials. You've got Scott Bessent over there with Vice Premier He Feng as well. And so there seems to be some progress being made. It seems like these talks are candid and they're not going off the rails, which is certainly a positive thing, particularly because the talks with China are so much more complex than obviously what we've seen with other trading partners. Some are saying that maybe what we saw with the EU as far as those negotiations are concerned may act as a bit of a template as to how we saw the EU lining itself up for potential retaliation there. That's certainly what we've heard from China. But obviously there is so much at stake here beyond just the tariff rate. Now, we're still not talking about tariff levels of 145%. I think right now we're talking about, Diane, an average of about 50%. If you talk about, Trump 1.0 tariffs of 20 or so percent on average on China, plus the 10 on the fentanyl, and the 10% baseline that we've obviously seen for most countries. But there obviously is a lot of non-tariff issues to get through as well with regards to some of the leverage that many out there see that China has, particularly on the rare earth materials. We were talking about that yesterday, obviously to do with export controls as well. In recent weeks, obviously, we've seen the fact that NVIDIA has managed to score with getting its H20 chips back into China as well. But then obviously we have the TikTok talks too. We have some of the concerns around China getting that discounted oil from Iran and Russia, which obviously is sanctioned. So what we're looking at is an August 12th deadline for now, and what could come out of this is another second truce, a 90-day extension, so kicking the can down the road. And I think, from what I'm seeing from a lot of the commentary, the view is that markets would likely cheer that outcome, only because with so much going on in this relationship, as I said, so much at stake, that if they can just manage to try to avoid any further escalation, that is very key here when it comes to the US and China. And just to add to that point of potential further de-escalation, there was, I'm sure you caught in the last 24 hours, suggestions that Trump may have actually blocked William Lai, President of Taiwan's trip to New York, a stopover on his way to South America, as a way to try to avoid derailing potential trade talks and a further meeting with President Xi Jinping down the road.
Right. Yeah. Listen, I was just, speaking of President Trump, I was just checking Truth Social just to see if there was any new, kind of commentary around trade. It looks like the last was basically last night, essentially, that touting the EU deal, of course, and saying numerous others coming. The United States is doing great, to put it mildly. That's the last I saw on that front. But we also know that, President Trump speaking in a press conference yesterday, seeing that the baseline will essentially be somewhere between 15 to 20%. And, it seems like where the market is seeing that baseline is 15% and not as bad, again, as that chart that came out, the 145% on China. And to your point, though, about, if there is an extension, which that seems to be the focus of the talks in China, to another 90 days, that takes us to the holiday season. And that's one of the concerns is if those tariffs, especially as it relates to China, end up increasing or becoming more draconian, what happens to that season here?
Absolutely, because rhetoric is very different from the reality, and I think that's been the case, and as to why it's been a piece of information that has really helped to drive, obviously, the S&P 500 to these constant, records that we've seen over recent weeks, is that while investors are cheering a lot of the trade deals that we've seen getting across the line, the big question mark now for the markets is going to be the ramifications and the consequences of some of those tariffs tariffs once they're actually in place. And to your point, yes, we could maybe start to see a material impact, a sort of tangible effect on, how these companies are actually swallowing the tariff, where they're picking up the tab in their supply chain. And I know we're going to get to some earnings in a minute on that. Maybe we won't start to see that, as I think you were talking to a guest about yesterday, potentially just before that holiday season. Because if you're talking about another 90-day extension on China, that is very much kicking the can down the road to,
to the holidays.
Well into the second half.
Exactly. All right, so speaking of impact to companies, we've got earnings out from UPS this morning, and it looks like they are experiencing the bite of tariffs.
Yes, well, you can't have parcel services in your title without obviously feeling the bite of tariffs, can you, Diane? And also, this company has warned about the de minimis exemption that has been obviously scrapped, affecting their business too, particularly when you look at some of the smaller companies. Let me run you through some of the earnings of this morning that we've got from that company, and then dig into the tariff impact and what it all means, particularly as this company has also highlighted some challenges around the macroeconomic picture too. So it was a revenue beat, but profit was falling short of the expectations. It didn't give a full year outlook, so it withheld that guidance. And, Diane, this is a story that we have been tracking over the last couple of quarters, where, even though we have seen companies, wasn't the case with UPS, but where they have beat on the top and bottom line, it's really been investors picking apart that guidance, what they've had to say in that, which is how we've seen the stock reacting subsequently. They did, as I mentioned, cite the macroeconomic uncertainty for the reason behind not being able to give some of that visibility as far as that forecast is concerned. So we know from the macroeconomic side of the equation that they have been slashing jobs. They have been actually shutting down facilities to save some money. But when you take a look at the tariff impact, which is, to the point that you were making about what we're seeing with China, this is something that they have flagged as a potential risk. They have been losing business because of that de minimis being taken away. So that is the exemption on the packages below $800. It is obviously something that, when you were looking at duty-free parcels, was very beneficial to small to medium-sized businesses, particularly those in Temu,
Shein. I was going to say,
Shein,
exactly.
They, these big companies, are able to find other customers. No doubt the US consumer base is, a huge part of that business. But, I think, from UPS's standpoint, and I know the CEO has talked about this as well, Diane, that, these smaller companies cannot diversify their supply chains and their markets as well as the big companies can, moving manufacturing or sourcing to Vietnam, Malaysia, places like that. They really rely on China for these smaller packages. They don't have the sort of financial muscle and power to make those changes, to build those inventories up somewhere else. And so we know that the company has obviously flagged that previously, but this potentially having an impact on those discretionary online purchases from the likes of your Sheins and your Temus from China.
Yeah, shares of UPS right now down nearly 3% in the pre-market. The stock was already an underperformer year to date, down nearly 20% year to date. Thank you, Sam.
Thanks.
Appreciate it. That's Sam Vadas, Schwab Network contributor, with a look across the impact of tariffs and the latest on tariffs.